Hey guys, and welcome back to another video, and today I'm going to be going over a SPAC merger that I think went a little bit under the radar, and that's going to be the merger of Taboola with IACA. Now, one of the reasons why I think this might have gone under the radar is because of the fact that they announced during the whole GameStop situation, in which all of the news was focusing on that massive short squeeze. So I think a lot of the stocks that were announced during that time didn't quite get the hype that many of these other SPAC announcements get. Now, to give you a quick overview of the deal itself before I get into the company, it's coming to the market with a valuation of right around $2.5 billion. It will give the company around $500 million in funding, and the merger should close in the second quarter of 2021. So what is Taboola? Taboola is an advertising company, but it has to do things a little bit differently. It takes the information and looks for the people. So it's going to find your ads that a publisher may want to share, and it's going to match them up to the people visiting their site in order to provide the people with an ad that they're the most likely to click on. The thing is, though, that they're a little bit of an underdog in this space, and that's because they don't have the massive amount of data that competitors like Google or Facebook has. And that's just because they don't have quite as many users, and because of the fact that companies like Google and Facebook keep that data locked up into themselves. Although Taboola is not a tiny player in the market, it does have 516 users every single day, and it also recommends around 1 trillion ads every single month. Taboola is trying to take over that extra 25% of the digital market. Now, they estimate that around 75% of people's time is spent on things like Google, Facebook, Amazon, those big tech giants that have really taken over the industry. Taboola, on the other hand, is trying to take care of ads for things like news sites, e-commerce sites, obviously not Amazon, but smaller e-commerce sites, and then apps and games like maybe on your iPhone. I think you'll be surprised if you keep a lookout. A lot more of your ads that you might think are recommended by Taboola. I knew I was going to make this video yesterday, so I started looking out for it just the end of yesterday and today, and I've seen a ton of ads that say recommended by Taboola. The beauty of the ad market is that it's all performance-based. When a digital marketer is looking to hire a company to provide its ads for its website or page, it's going to be based on the amount of clicks on the ad that they get per person who views the ad. And the larger amount of clicks that they get, the more they're going to get paid. And also, the more amount of clicks that they get and the more users that they reach, the more data that they can gather. Like I said, they're locked out of those big tech companies' data, so they're having to slowly accumulate their own data in order to create that higher yield that I was just talking about. Luckily, this company knows that they're one of the smaller players in the market, and they're perfectly fine with it because they're willing to put out around $100 million every single year into research and development. They also have 500 staff in the sector and 100 specifically dedicated to just focusing on algorithms and data. And this is one of the most important things for this company because, once again, the better they get with those algorithms and data, the higher yield or the higher amount of clicks per person they're going to get, and the higher amount of money they're going to be able to charge for those ads. They are constantly working on providing the best ads for their consumer. They have reviewers 24 hours a day during the week and 14 hours a day during weekends, and they also have 24/7 AI. The better that they can train that AI to filter out ads that may not be as effective, the more effective the company is going to become as a whole. The people who use Taboola as a service seem to be pretty satisfied with them, as they have multiple publishers with a 5-year contract, and it's some of the biggest news networks like Bloomberg, CNBC, USA Today, and one of the most impressive statistics is their 120% NDR, and essentially what that is the amount of money that they earned from a certain customer group this year versus the amount of money that they earned from that same customer group in the year previous. And what it does is measure the amount of customer retention that they have. Anything over 100% is a great number. In terms of a rough estimate of their current financial situation, they're bringing in right around $1 billion a year in revenue and taking home right around $100 million in earnings before taxes. The recession that we experienced this year didn't seem to impact them too much. This top graph shows the RPM, which is the revenue per milli, or essentially the amount of yield per advertisement that they get. And you saw a large dip right when the recession started, although I don't even know if you could attribute that to the company themselves, but maybe more just people not having as much money, and so advertisements weren't as effective at the time. But they've experienced a strong recovery, and they're currently at their highest levels. Their cash expenses are also at historically low costs, so when you combine a historically high yield with a historically low cost, you can see why I think this company might be headed in the right direction. They also state that they've had dramatic improvement in algorithms, which would explain that higher yield. Now, like I said earlier, Taboola considers themselves an underdog, and they love this rule. You can even see that on their investor presentation itself, they said that Taboola is for advertising what Shopify is for e-commerce. They don't want to be the Amazon of e-commerce. They don't want to be the Google of advertising. They want to be the Taboola of advertising. And that's not the worst thing in the world. You can see that Google is currently bringing in around $150 billion in 1 year from advertising. If Taboola could even achieve 10% of that one day, that would be $15 billion in revenue, or 5 times more than they currently have. They don't need to have a massive market share of this space in order to generate a heck of a lot of revenue. If you did go on to enjoy today's video, make sure you leave a like down below to show your appreciation, and subscribe so you don't miss any more videos like this one. But other than that, I'll see you in the next one.